If you don't know about Ronnie McDowell, older women are beautiful lovers, blah, blah, blah. Ronnie, if you've ever seen his artwork, he is fabulous. You should see, I mean, the guy's an artist as well, not only a musical artist, but an actual art artist. And you should see some of the prints that he's done. One that he did is Elvis. And what he does is he'll take these people as kids and he'll draw them as a kid, looking in the mirror, seeing their superstar self in the future. And he did that with George Jones, and he's got George Jones on the lawnmower. Y'all remember the story where he was drunk and run out of beer, so he was taking the lawnmower to go pick up beer from the store. Oh, what great stories, right? We should all live a life to where at some point you're on a lawnmower going to get you a beer from the store. I don't drink beer, but if I did, I'd go for here's my drink of choice. Here's what fat people do. Yoo-hoo, baby. Yoo-hoo. All right, so when someone says something in the chat, going to restart, be back in 5. Okay, Tom's going to be back in 5. All right, hopefully everybody hear me good. The most exciting thing that happened to me is while I slept, I think it was while I slept, look at this. Boom, chicka-laka, chaboom. While I was slobbering on the pillar at 2:36 in the morning, I bought 12 of my shorts back that I harvested for 20 cents. Now that's when the black swan hedge wall gets strong, baby. So I bought back my shorts. So that takes risk off see if we look at them. And we're really another order filled with 3. It may fill today. It may go, well, no, that's my field order. Working order, Bob, working order, get it together. It's at 25 cents. And so my price 10, and you've harvested what, 15 short puts in the ES? Crash, baby, crash for $1.50. I put the shorts on a down day, just like Rod TC order in, and I'm going to be greedy. So I'm not going to buy those back at $1.70, which would be a break even. I'm going to go and make cool stuff. So while Tom is logging back in, he's going to be sharing with us today. So we're looking like, let's go and put it on our vol step 4s. And I like moving it up to see what happens in a 20% crash, because that's Rick Sleeves. Now let's see this pretty little puppy. And my new computer was supposed to be delivered today, but no big deal. Oh, and Drew has some too. Jason is very helpful as well, because Jason's going to be doing us some Google Drives. So look at there, baby. Let's see what we got down here, first of all. ES, single symbol, and get it all. So this is showing my black swan hedges, my space trips, and everything. I just got everything in here. So, if we go down 20%, I'm up 118,000 to 178,000. Yo, is that sweet or what?
Positive sentiment, positive news flow, and arguably a puke that got to a relatively attractive level.
Let me mute everybody. There we go. So we don't hear everything coming over. All right, so there's my hedge, y'all. Cha-boom, chicka-boom, chicka-boom, boom, boom. God, is that pretty? I mean, I could sit here and stare at that all day. Now you say, Bobby, does this stuff ever work? Yeah, it does. It worked in March. And for those of you that are new, what happened is I had the black swan hedge on a little differently than I have now. I had it on in a diagonal portion, but you can imagine the excitement on one day when the market was down big, and my account was up 208% on the day. When I totally went to cash, the whole thing was up 208%. And Bobby was ecstatic and beside myself. So that looks really, really good. And this should, well, wait a minute, let me take the show off. Hide simulations. Oh, it's not that good now, is it, since I hide my simulations? Hide simulations, I'm up 95,000 or so. Where are my space trips? Take out our space trips. What do our space trips do? They help us in a grind down market. But I like the 111 trade a little better, I suppose. Yeah, so we take this off, and then this is our true hedge now. So our black swan hedge is up 105,000, 70 to 105,000. Can y'all imagine the day when that hits? Now, keep in mind that I'm selling puts every day along the way too, right? So let's just look at our chart for a second. And somebody kind of tell me when Tom comes back in. Who's going to? So let's look at our market for the day. And then we're in lunchtime chop. Well, kind of migrating up. And then I look at the overall number. AD, advancers over decliners, is 185. So, it's positive. The blue line here is our overnight high. You see, we tested it there. We come down and test and go up above it. Now we're above VWAP. Now our little alligator, Williams alligator, started to open up its mouth to feed, and that's so it's creeping up. What I would expect for the day, if any of y'all are doing 0 DTE day today on SPX, what am I expecting? I'm expecting price to fluctuate within our opening 15-minute range here, which is the gray area. It's at a 9-point range. So it's staying in a pretty tight range. I would anticipate the final 30 minutes of the day for the buy side algos to come in and to push this upward. That's what I'm looking at. Our volume profile. In case anybody's going to do a Rick trade today, let's see what that looks like. Yes, we look at the E-minis. So let's check out the E-minis. And we started late today, y'all, because I went to Chinese. Beth and I had your 12 got filled too. Doesn't it feel good, Stacy? Especially if it happens in the middle of the night. Those things get filled and you're like, crash, baby. I want the market to crash. So here we go. What's the price doing? Here's ES. We are above the 20 exponential, the 50 exponential, 200 exponential. I'll keep yawning. I'm sorry, I'm not opening my mouth, but that Chinese food is like putting me to sleep on our little date day today. No kids. The woman at the Chinese restaurant, she says, what are the kids? They in school? I said, yes, they in school. She said, oh, you and mama have date day. I said, yeah, we have a date day. Those are a lot of fun. All right, so volume profile is here, and this is the point of control where the most volume has traded in the last 10 days. So what do we see? We're making new highs here over the last 10 days, and we are fairly priced. How do I know that I'm fairly priced? Because we draw something called the big green monster. That is the most important thing that we do here. And this range from here to here is the fair value range. So we're fairly priced. So I don't anticipate any until potentially we get to 4441, 4441. We get to 4441, we might experience a little resistance with a gradual pullback maybe to this one standard deviation above. Would not surprise us to at some point next week see a pullback to the 50% line near the volume profile point of control, which is here. Here's the one standard deviation below. So I think in all things we're looking at, we're going to stay above this 2 chart. So that's what my preface is for the day. So would I feel okay doing the Rick trade and SPX at the end of the day? Well, barring no change in today, yeah, I'd be fine doing that. We have one on today that in all likelihood, the Rick trade will expire totally worthless and we'll make our $50. So we can go to Applebee's. No, we can't go to Applebee's on $50 for my sailing away, baby. There's nothing wrong. Now, let's look at our first thing. And Tom is back, fortunately. So we'll bring Tommy in here a second. Let's see if we can pull up our little skew driver to give one last in line. So we're going to go, we always double check it. So we'll go to the trade tab and we'll go to SPX and we go to the expiration nearest to 30 days. So, here you could even use the September 3rd and September 7th. I would probably err to the September 3rd. Let's go here. That's indeed the number that we got there. The expiration date is September the 3rd. We've been tracking this number every day. So we want to see how far we are from the money at the 20-point wide spread that trades nearest to $5.20. This little spreadsheet will do it for you. It's in our resources tab in Discord. So we're saying that the one that's about $5.20 is about 33 bucks out of the money, 33 out of the money. So then I've been logging that. Oh man, I didn't save yesterday's. Wasn't yesterday's like 36 or something? Does anybody remember? 521 was, I think it was 36 or 35. I'll put 36. So you just want to kind of see how this thing's moving, right? So in the options are telling us skewing the opt out. Yeah, 33, 34 out of the money. So we'll put that 33, 34. Let's say 34. What happened to my date there? 8/6/21. So what does it tell me? Business as usual. The skew in the options is giving me, what if the president chokes on a chicken liver today, right? Then, either the market would love that or hate it. Some things can change, but for the most part, the market, I can tell it's business as usual. So I'm not scared to sell puts. Say it. Tom, can you come on in and talk to us a little bit? We're glad to have Tom here. I see Tom anyway. Hello, Tom. Maybe he's having trouble hearing me. I'm going to ask him to unmute. Hello, Tom. All right, we'll wait on Tom.
I'm here.
Oh, hey, Tom.
I stepped out for a second. I'm in a conference center here, so.
Oh my gosh. We're not bothering you too much, are we?
All good.
Okay. Well, hey, Tom, listen, you shared the other day, I thought you kind of about your whole portfolio approach. So I thought you it'd be nice to just have you kind of talk to everybody. And we're very grateful you shared the 111 trade with us. What I like about that trade is it gives us a little bit of downside protection. And that thing seems to be really resilient for the ones that I put in so far. They seem to be doing really nice.
Yeah, those 111s have been, they've been a good trade, and they're a good intermediate trade where you're getting paid to have what I consider a hedge, a medium-term hedge.
Awesome. And what were you going to share with us today? Wasn't it the 1-2-0, which I guess is a ratio spread, right?
It's yeah. So it's a front ratio spread. It's if you listen to again, hopefully you guys can hear me because I don't know that I have great audio here. So does it sound okay?
The audio's cutting out a little bit there, Tom. Yeah.
Give me one. I don't know why I have low system resources because I just rebooted. So maybe if I can't do it today, we'll revisit Monday. But let me know if it breaks up, and then I'll stop for a moment.
Okay.
But
so what would we put this in? SPY?
Yeah, go ahead.
Macros
We'll
too?
do SPY, and the 1-2-0 is really a 1-2-1 butterfly. However, we're not going to put on that far out of the money long. We're going to leave it open. So we're going to go out about 45 to 60 DTE. So take a E.
Here's a 55-day.
Yeah, perfect. Let's grab that for now. It doesn't really matter, but for our purposes here, I think that'll help.
Okay.
And we're going to put on we're going to buy one. I'm sorry, breaking up a tad. All right, so we're going to buy a put buy one at 25 delta. So buy a put somewhere around 25 delta.
Okay, so about in here, 25 delta. So we're going to buy that
one
one
at 25, and then
Okay.
we're going to sell. So what's the cost on that one? I think it's blacked out on mine.
Let's see, 513.
So what are you paying for that? Okay,
513.
that's that. Okay, so we're going to go out and we're going to sell two. That's going to give us about $1 credit.
Okay.
So we're going to need to sell something right around $3, I guess. Sell two around $3.
Two around $3. So here's one for the 405 for 303.
Yeah, 303, even the 312 might be better. Give us a little bit better credit. Go up one.
Okay.
Yeah,
And we're going to do two of those.
Sell two
I'm
of
going to
those.
make two of
Yeah, I'm
those.
gonna sell two of those. So we should have about $1 credit.
Yeah, $1.12.
Yep, and there it is. It's pretty simple. Now the risk profile is not going to be a whole lot different than your 1-1-1 trade, except the wing. Again, a
so
risk
there we are.
profile standpoint, it's similar to the 1-1 or that triangle tent as opposed to the larger tent that the 1-1-1 is going to give you. But if we start to move closer, then that T+0 line is going to tick up, and we're going to have a profitable trade. If the market doesn't drop, we're going to make $1.12, 5,000 on your accounts. That's about right. And these are nice to put on a down day as well.
On the down day
But
as
you
well.
can
Okay.
the 1-1-1 or the 1-2-0, essentially a very similar trade. And
Looks
the nice
like,
thing is,
yeah,
go ahead.
Looks
Looks
like the major difference, I think the 10 is higher, right? The 10 is higher.
The 10th is higher, right? So if you nail it, it's going to give you a lot bigger return. The chances of you nailing it aren't high. The key is all of these trades, the 1-1-1, the 2-0 here, or the one, slowly get down to the front entryway of these tents around expiration. If you get in the tent, even better, not better. Your break even, it's hard for me to see on your screen, but what's your break even down there?
Let's see, the break even down here is what around the 395 or so?
Yeah, so 395. So you're talking a over 10% drop in SPX to your break even, or in SPY.
Okay.
It's a 50-point move down from here. And that's a pretty hefty move. So if we drop 10% tomorrow, slowly grind down 2, 3, 4, 5, 6, 10% over the next couple of weeks. The worst thing that can happen, which to me is the best thing that can happen, is I could get assigned shares of SPY. I'm going to get assigned, that longer put, but I'm technically my break even here is below that. So I'm going to get assigned it for, price on this. And I'm happy to own SPY on a 10% drop. I want to own as much SPY as humanly possible. For me, the person who owns the most SPY when they die is going to win. So some people love real estate goes up, and over a lifetime, owning a lot of SPY is a really nice thing to have. So am I happy to own SPY? It roughly am. I would love to own it, and I'll wheel it or sell calls against it, or I'll just hang on to it as the market eventually works. It doesn't scare me. But two, if we only drop 5 to 10%, I've got a nice hedge. And if we don't drop at all, I'm going to make, you know, $100 on this trade, and it's just another one that I have in the kitty.
How does the break-even point of this one compare to like the 111? Which one is more?
Do you want to put a 111 on right now,
Yeah,
and we can
let's
take a
see
look
that.
at the exact same trade. So note your buying power here, and note your break evens.
All right, so let's see how we did we did a long put and we could do
Yeah,
for.
so we want to get a
5 points
wide for
wide.
dollar.
There we go. So let's move those strikes down. So we're going for $1 there. So about there, right? So there it is. And then we want to sell the one that we can do for $2. There's 204. We'll do that one, sell that one. All right, let's see what that looks like. Okay, so there that is the 111, the 3, where is that? 385 or so.
Yeah, so a little bit, you know, a little bit further down break even. You don't have the high tent, but you have a big the same upside. And this is, you know, shown in yours here, Bobby, about what, $4,000 BP. I like to go with a 222, so it's going to tent. And really, what you're looking for is you're really watching the T+0 line. Then and we start to get into the tent. It's going to be great. It's still pretty good. So
Tom, the audio is still maybe touch base again next week. Sounds like you may be in a location it's a little difficult on the
yeah,
resources with
that
the
may be
audio.
the case. So yeah, so you have the basics here.
Awesome, Tom.
Or we can try to touch base next week.
Yeah, awesome. Well, listen, Tom, I'll let you go then on that note, but thank ratio spread, and you kind of see the difference. And y'all, we could still do these. You know, Tom likes it in SPY because he's
That's
trying to
correct.
know, basically. So we like that. Or if you don't use that much buying power, you know, micro E-minis, but, you know, keep in mind it's span margin of doing that.
Absolutely.
Tom, thank you so much for sharing that with us. I
All
appreciate
right,
it.
we'll have to get back to the land of internet here soon.
Okay, Tom.
We'll do something next week.
Great.
Awesome,
Thanks so
guys.
much. Thanks. Yeah, the good thing about our room, y'all, is we're fortunate to have a lot of good traders in here. You know, we got Ken and you know, Dwayne. We got all the folks that can share different things with us. We got the Rick trade, Mr. Rick himself, that joins us. He's been busy this week, but you know, there's all kinds of different trades that we can do to figure these things out. It's really, really cool when you start doing that. All right, so now we know how to do that ratio spread. Let's talk about, we talked about my Black Swan hedge being filled. Let's switch just for a second to the AIM account because we've got a trigger. I love it when an algorithm triggers. I say I love it when an algorithm, where's my dang thing at? Hold on. There we go. What did someone say in chat? I wish we'd have had better audio with Tom. Yeah, thanks, Tom. Good, Rod. Yeah. So check it out, baby. We've got a signal. I got 128 shares of UMDD. The current stock price is 31.63, and we got a signal, baby. So AIM is saying book the profits. Bobby, you started buying UMDD at $27.12 a share, and UMDD is now flashing at not 27 but 31. Sell, baby, sell. So let's do that really quick. Let's sell a share of that. First of all, let me see what UMDD is trading for. UMDD is selling for so 131.52, 152. UMDD, not 4x. We don't want to lose money. UMDD. Let's do that. UMDD 31. What did I say? 43. So let's sell a share. 31.53. So we will sell a share at 31.53, not 100 shares. We just want to do one share at 31. We'll try 31.54. If we get filled. There we go. Wow, we got it sold at 31.57. Look at us. Boom, chicka boom. Make sure to plop it in to the spreadsheet. If you're running AIM and you need to get set up on AIM, you know, book a one-on-one with me. We'll get you set up. So the AIM activity now, I got to go there, go to UMDD, UMDD. So number of shares bought or sold, make sure you make that a negative. And we got an 8.6 trigger. And the price was 31.57. Then you got to answer the question, was this new capital we put in? Did we rebalance the entire deal or did we buy a new underlying? The answer to that is no. That's very important to make sure you answer that question correctly. So the last two trades that we made on UMDD have been sold. See, the current streak says we've sold 2 in a row. Let's see if that's correct. Here's a UMDD sale. Here was a sale of 5 shares. And before that was a purchase of 133 shares. So indeed, that is telling us correctly. So the governor or the restrictor plate on our program has gone from 0.1 to a streak of 2. So the new governor for UMDD is now 0.15. Everybody see that? Isn't that cool? How Sweet Bobby put in the brakes to slow the roll down on up moves. So we don't want to book big profits. So the more times in a row that we sell, the bigger the governor goes up. So if our next order says to sell again, we'll have a streak of 3, and our governor will go from 0.1 to 0.15 up to 0.2, which I use in the algorithm to tell me when or when not to sell. So the cool thing is that with our AIM dashboard, you are only being told to sell your shares if you are booking profits. And this little thing now just says do nothing, right? There's no action to take. How sweet is that? I love it. So we booked profits on that. So we had 699 shares total. So we're down to 698 shares. We know what to do. So am I going to sell a micro today? Well, the market is up, but yeah, I'm going to sell another one today. So let's go look at that. Let's go sell a micro. Because if I just bought back and harvested 12 E-minis, and an E-mini is 10 times the size of a micro, can I sell a micro today? Oh, heck yeah, right? I mean, easy shooting fish in a barrel. Where do I go? I go closest to 60 days without going over. And I usually go to the 10 delta. When I say delta, I say probability of being in the money. Just easier to say delta. Look at all these other options of being in the money. You notice the premium's gone down a little bit today. Yesterday, we were able to sell that for 18 something. So today we'll sell it for 17.75. We're going to be a little bit greedy, work our price up to 18, see if we get filled. It's taking $425 in buying power, or so it says. Get filled, we'll cancel, replace. Oh, sometimes it doesn't pay to be greedy. Cancel, replace, 17.75, dang it. And we'll get filled there at the natural price. And we're filled. There we go. All right, it's right group, because I like grouping my in. Find the one we just sold. Yes, it is in progress. Exit full screen. Share screen. Here we go. Sorry, yeah, Zoom cut out on us. All right, so SPX trade, are we? I'm not going to send it anywhere. That's our RIC trade that's on for the day. So we're up $50 on that. We would just be watching that closely. So here's our micro position that we sold today. I did one yesterday too. So let's move both of these. Hold your control key down so you can mark both of them and move that to our, there we go. Right click, move the group, go short puts. Okay, so that then should leave me with, that's probably just the order, the GTC order. Yeah, not actually a position there. So now I've got everything grouped. All right, so now let's look at our micros. See if we need to manage anything. So how do you manage these things? Remember when I had about 20 of these on at the same time? My management technique was sell one a day, take the most profitable off per day. So you could do that. And the good thing is, look, we've got one here that has a $47 profit. It's over 52% profit. Still got 42 days left in that trade. Why would you not take 52%? Why would you not take 52%? So we're kind of getting in that area where we've got what one. So if we get about 20 of these going, we'll be doing the same thing, man. Just selling one, taking one off. But certainly, if one gets to 50%, Tasty Trade Research says take her off. So let's try to close this one. Create closing order. Buy it at 875. That's the mid and the nat. So that's probably where we need to go in, claim our 52% and be done with it. Put that in the win column. Make sure we get filled. Ba-doom, ba-doom. There we go. All right, so let's look again. All right, so that one's at 47%. No need to do anything else. I want that you go, oh man, I'm the market's down a little bit. These things are still going to be profitable. Now, a $42 profit that you have today with a good size down the market, maybe you only got $20 profit. So if that risk is there, once these things build up a while, then you can always, close them if you've got a different feeling on the market. But our feeling on the market today is it is clear safe it's going to be doing. Now, my AIM is getting hurt a little bit today because of, I think, what is it that's hurt me today? The metals. AIM is getting hurt just a little bit today. Down 356. On the day, silver is down $218 for me. What else is down? Gold was down, I thought, a little bit ugly. It's down 132, but it's really the silver that's getting me today. So Interestingly enough, though, it's not enough to where the algorithm tells me to a point, it would tell me to buy more silver. Let me just look. So the little spreadsheet says that we're trading. Silver is at AGQ 39.44. So if you wanted to, let me do this. This is cool. You can start playing with this, right? What if the price of silver goes down to 38? Let's just change the price. Price of silver to figure out how much lower does silver need to go before I get a buy. What if silver went down to $2? What would AIM say? AIM would tell you if it's silver went down to $2, it would say buy 1,550 shares, which would be a very smart investment. All right. So I love that we've got AIM algorithm just running, telling us how to run your portfolio. So if you've got a portfolio of stocks, why are you not aiming it? Because you got an algorithm here that'll tell you exactly when you need to do, whatever. Make sure that's doing right. Yep. Because these prices are pulled in from Thinkorswim. This thing automatically updates. So all I do, this is the lazy man's trader, right? We started this on July 19th. We are up $1,959 since July 19th. So under a month on a $50,000 account, I guess. Really, really good. And you can see where our AIM is. We own most of our money is in NASDAQ, the triple leveraged NASDAQ product, and with about the same thing in UPRO, which is the 3X S&P 500. So we've got money there. So you go, Bob, what if the market goes 35% down in a day? Well, probably not going to happen. But if it does, would this pretty much go to zero? Well, they're not exactly 3 times leverage, but I'm taking a chance with a certain amount of my money. How much do I have in UPRO? Oh, it's freezing up on me. You stupid computer. You wait till you die on Tuesday, Jack, when my new one gets here. FedEx can get here. Y'all, FedEx in our area is horrible. UPS is so much better. So how much do I have in UPRO? So let's say the market drops 35%. This thing goes down to zero. I've lost $4,300. Dang it, right? And then I probably lost the same thing in the Qs as well. Dang it, that's $8,000. Keep in mind, if it goes down 35% of the day, we got the Black Swan hedge. Ta-da! That's a hedge allows me to do so much more. That's why I can sell all these puts and do all this other garbage. Really, really, really nice hedge in the background. Now, Rod was saying this. Rod, let me help you. Let's just talk through it today. Let me open up so I can read your question because it was really, really good. We'll just kind of address it here. All right, so Rod says, if I were new at starting this hedging, which I am, is it wise to try and leg in on the initial one or just buy your first tranche? I have my first 3 shorts on from the other day when the market pulled back a little. So you did exactly the right thing. You sold your 3 on a pullback. I do have a 120 on in SPY, which is what Tom just showed us, and a 111 on in the micros, along with a VIX vol hedge, 1 each in each account. I have no fully formed Black Swan hedge tranches yet. Okay, so this is a very, very good question. So what I decided to do, and it's going to depend on your account size and everything, but this is roughly a $50,000 account. What I decided to do was to put 4 tranches on all together. And if you're going to buy it on an update, well, what is today? Today's an update. So if you were going to do that in ES, let's just look at it. Here's what I would do. I would go to ES. Now we can put these on in the micros too, according to your account size, but we're just talking hypotheticals here. If you had a $50,000 account, go out past 60 days. So let's see if we could do it in the 70 days here. And I would show you the strikes that I would use. 70, let's see here. Make sure we got adequate strikes. And we do. So what I would do, if I were starting the hedge today, what I would do is I would sell 3 of the 2750s at 310. So you're looking for the one that goes for about $3. So I would sell those 3. And I would buy, oh, sorry, that's 4. Hold on. And then I would buy 5 of the 2700s. So we buy 5 of the 2500s. We would sell 3 of these. Then we go back to 5, 3, 4, 5. There you go. So it says that would be a $5 debit. So how much would one tranche cost you? It's going to cost you $250 plus commissions. $250 plus your commissions, $264.56. So a day like today is a great day to buy a tranche. So what I did is on an update, I bought a 1220. So if you do a 1220 and move this one up to 20. All right, so a $5 debit times 4 will be $1,000 plus commissions. So it costs you $1,000.58. Now, if you're doing this, you're going to have a super hedge, but it's going to cost you $1,058. key is you need to pretend that you are going to lose that entire. But by having this trade on, guess what you can do? Then you start selling micros every day to cut down on the cost of your hedge. So the hedge allows you to sell puts. That's why the whole time some irregularities in her accounting and recognizing her fee and things of that nature with the SEC, I was screaming to the top of my lungs, Karen, call me. Let's work with you. Let's get you a hedge in place, because she didn't have a hedge in place. How awesome it is to be able to sell premium on a daily basis when you've got hedges that are behind your back, covering your tail side, so the crocodile don't bite you in the butt. And that's what we have by doing this. Now, let me preface this. That doesn't mean, you just go sell everything and anything. You've got to check everything out on your Analyze tab. I like to look at my Analyze tab to make sure that I am safe in the event of a crash, because what I don't want to do is like I did, in 2016, and, in one day, y'all, a day, and eventually blew that account out, the whole account, and had to start back over. So I don't want to blow things out. So that's why I'm always, Karen said, I live on the Analyze tab. And by Karen living on the Analyze tab, so do I. So do I. So if you have this on, these are the strikes I would put on today. Now, I can show you a different way of doing it. If you want to do it differently, I'll show you something different. So how about this? What would happen if you sold the 2750s, sold 3 of these? I'm going to show you how I did in 2020. I don't necessarily like this, but watch, this was cool. So I sold 3 of these. Then I would look at a shorter expiration. So I sold the 2750s, 3 of those, shorter dated expiration, and I entered these things in a diagonal fashion. So I might go to the 55 or the 42. I'll probably go to the 42. Ask me why, because options will be cheaper in the 42 day. Oh, that's the PM settled. I don't have enough strikes there. Let me go to this other 42, this 42, this 42. So we were saying the 2750. Now watch this. What if I bought the 2750s? Let's just look at that. I could do the 2700s. What if I bought the same strike? Let's just see what this would look like. And we're just playing. Oh man, will it not let me, I thought it would let me do this diagonal. Let's go 70 day, 2750. I'm gonna hold down my control key. Hopefully let me do both. I got a feeling it's not. Hold down my control key and dang it won't.
Bobby,
Let's just do,
go ahead and just
yeah,
do
what
the
did I wrong?
spread in one expiration, then go over and click from vertical to custom, and then adjust the date.
Okay,
That's how you do
good.
it.
So, all right, let me do that then. So I'll hit the 5 here. Okay, then we'll go 2, 3, 4, 5. So that's custom. And then you want me to change it right here? Gosh, I don't remember which one it is. What's that 24 or 42 day? Let me see. Is the 1, 2, 2, 42 is ESU 21. ESU 21. Go back to my order. ESU 21. See if we can find it. Dang it, that won't let me do it. What am I doing wrong? All right, look.
Okay, you got week 3 for the shorts, so you want to look for a week 2 on the longs. And you were going to do 2750 on both of them. So basically you're making a calendar and you need to adjust your strike.
Here we go, 2750 there. Oh, let me see. ESC. See where to go. No, trying to do that. Won't let me go. Those are the only choices it's given me. Let me do this. Let me just stop this and we'll use our handy dandy calculator. All right, so here's what I would do. And if we go to the 70 days out and we sell that 2750, here we go. 2750, sell that 3 times. How much credit will we get? We're going to get 2, 3, sell 3 of those, firm and send. We would bring in a credit of 459. Okay, so let's do 459 is our credit. Everybody with me? 2742 day. I'm going to show you exactly how I did this last year in January. So then I'd go about 30 days closer. What's 42 to 72? That's 30 days, right? So I go 30 days closer, and I would either buy the 2700 or 2750. Let's just look at either one of them. Let's go here and let's buy 5 of those. How much would that cost me? Buy 5 of those. So that would cost me $250.19. All right. See how cool that is? So that means I could put the whole diagonal on. What was it? $259 for a credit of 200. Now that's pretty sweet, right? So let's see what that looks like though. I want to make sure that it gives me crash side protection. So what we would do then is right click on this and we'll analyze that trade. I got a feeling some of y'all are going, what is this idiot? The only one we're showing is the dollar one there. So we'll get that out. Okay, so that should be the only trade on the page. Flats, that's the only one. Now let's go back and sell our 2750. And so we'll go back to trade page. We'll go to 70 days out. 2750. We'll sell it 3 times. 2750, sell 3 times. Okay, now we're going to right click here. We're going to analyze this trade. All right, and so now we see all kinds of stuff here that we don't need. So that's the one that we just did for the 310s. Let's move on, take all these out. Now it only shows this one trade. So what's wrong? Why is it not showing our long? Well, the reason is because of the option name. So we will show all ES simulations. So what we would do is take out everything after ES, right? So we just want it to be /ES. And then you can go and evaluate our trade and see what it looks like. Ta-da! So now we've got out because it's doing what? It's starting to pick up. So we've got now entering this thing in a or an overall credit. And what kind of protection does that give us? On a downside crash, 15%, 20% down, you are up, ta-da, $5,500. Now, what else could you do to make this even stronger? We'll say, well, hey, Bobby, let's just put all credit. Let's do it for an over, just break even on the deal. So what you could start doing is even move this option up, right? So what happens if you move it to the 2,800? Well, then that's going to cost you $1.15. Well, how much is that going to be? Hit confirm and send. So you're getting a $400 and something credit the other way. So if you move your strikes up here, now look what you got for 42 days. You got wonderful trade. Now you're up 8,600. Wow, dang, Bob. Well, let's put this thing on for an even up to the 2,950. We're just playing 2,950, 2,960, whatever. So that one's trading for $1.50. So if we did that, confirm and send, how much is that going to cost? $3.84. So you can put that on for an overall still a credit. Right? You're taking in a credit on the shorts, and you've got a debit for the loans, of course, but the debit is less than the credit for the shorts. Now it's down on the 20% down. Chaboom, you're up $18,000. Hell, let's move this to $3,000. Isn't this fun? 3,000. Chaboom, baby. Watch this thing pop up. I say watch it pop up. I did it. Now you're up 22,000 on a drop and $1.65. Can you still put that on for credit? Confirm and send $421. So I think, yeah, because I think we were getting like 430, 459. So now look what you got. You've got a very nice hedge. How long is this hedge going to last you? It's going to last you for, what is that, 42 days? Right? And you are hedged to the downside, and you did it all for credit. Now, that isn't the way that I primarily like to do them, but that is all that I did in January and February of last year, putting these things on diagonally. And then to buy 5 more in this same expiration is 70, when you can get them for what, $1.50, $1.35? So what you're trying to do then is to replace these before 42 days. Well, there's a way that we can look at it and see how many days it's going to take you, all things being equal. So let's say that we got 42 days on this option here, on the long options. And you want to buy replacements before these. All you got to do is look 42 days in on this expiration and see what the 2,700s are going for. So let's see what they're going for. So we'll go back to the trade page. Oh, y'all, I just feel I'm doing a miserable job of explaining this to you. But if you ever see this, you're going to go, oh my gosh, Bob. So at 2,700 in the 70-day expiration, the 2,700 is going for $3. And you want to put a GTC order to buy these before the protection of your long options in the 42 days run out. Okay, Monday, go 40, what's 70 minus 42? 28? Yeah, 28. So go to the 28. So put your GTC order in to buy the 2,700s at 40 cents. Oh, if I can make y'all understand this. My ability to explain sometimes is not what. Now do you see what you're doing? So now you're going to replace the options that you bought today, the 3,000 or whatever that you're able to do for credit, and you're going to do so before they run out. So at some point, you're going to replace the ones in the current expiration for 40, 50 cents. So now, if you put on that diagonal trade that I just told you about, then you're saying, hey, man, I have 27 here in 42 days for 40 cents. So what is now $3 will in 42 days be, what was it, 40 cents? So then you could go, I need to do it before it runs out. So once you put your little GTC order to buy 5 of these, for 50 cents, and then change it from a day order to a GTC. Ta-da! So your hedge that would just put those long options in your portfolio. So you want to replace those 5 before they go out by doing what? You want to do by buying these 5 when they're at 50. Anyone got any questions on that? If you can pick that up, man, you're on the way to building you a big hedge that will protect you on a downsize move. It's really strong. Any questions about that? Now, that's not the way I prefer to do it. What I'd rather do, I'd rather you go, sell 3 here, buy 5 here. It's going to give you 70 days of protection. Yes, and it can be very successful. Then you can start legging into these diagonally. I'm going to sell this one at 27.50. Then I'm going to buy the 3,000 out 42 days. Then I'm going to put a GTC to buy these 5. And then what happens when these fail? You sell 3 more on the outside, right? You start going back to another expiration and you sell 3 more on the big down day. It's all about using what the market gives us. Market goes down. What do? Well, I know I can sell it for my black swan hedge on a down day. I can do a 1-1-1 trade. I can do the 1-2-0 trade. There's so much things I can do on a down day. What do you do on the up day? Well, I could buy a put spread. I could on an up day, you could sell a call. I hate calls. But you got to know what to do when the market gives you whatever the market gives you. Zero care in the world. Matter of fact, I want it to crash so I can, twofold my Kim. But at the same time, if it doesn't, I'm prepared to the upside. Why? Because I got great positive delta. I got great positive
I
delta.
had a question. So I know if it goes down, you want to enter 3 shorts, but would you ever want to initiate a new black swan hedge if it goes first and then buy the longs afterwards? Is there like an
All right, Jason, your audio was kicking down a little bit, but I'm thinking what you said. Okay, so if the market goes down, do you want to initiate another black swan hedge, like selling the
Oh,
three?
what I
Is
was
that the
asking
question?
is, so I know if I want to make another black swan hedge
Mhm.
and the market goes down, I would want to sell, and then if it goes up, I want to buy. Is there a scenario where it's okay to do the other way around? Like today, the market is up, sell the 3 shorts, or is it better to sell before buy?
I always have sold before I buy, right? Because now the cool thing is, look, I've got 191 positive delta, and it's crazy, right? I never do that. I always like to have my delta negative or slightly, neutral. So now that I've got the AIM system going, though, that's going to be positive, and I've just, agreed to have it positive. On an up day, let's say you wanted to enter it backwards, right? Yeah, here's what you could do. And especially if your suspicion, if your hypothesis is that you believe we're going to have a good down day next week, okay? You can certainly do this. What you could go out and say, well, if I was going to sell my 3 today, I would sell to 1%, and that's not when you sell options. You buy options, you buy puts on up days. So what you could do, this is totally backwards, and you got to make yourself a note, is you could buy these 5 today, because theoretically, you're using market timing to enter your trade. So what you would do is say, man, all right, so I can get those at $3. So check it out. I'm going to do that for $759. Okay, let's go to our handy dandy calculator. So let's go to, I know I got you a calculator here somewhere. So what happens if here's our break even. What happens if we buy our loans at $3? Okay, and we harvest at 20 cents. We don't want to change that. How much would I need to sell my shorts so that I break even? So what you do is you go to your handy dandy calculator here, and you go to data, then you go to solver, and you go, I hate to give you such spreadsheet nerdy stuff, but you're going to set your objective of K2, this right here, to a value of 0 by changing variable D2. So we need to change that for changing variable D2. D2. There we go. All right, so set objective K2 to a value of 0 by changing variable D2. So what does that mean? We got to sell the shorts for? It means we got to sell the shorts for to break even. Hold on, it's thinking, just a thinking. Think, baby, think faster. Y'all ain't gonna believe when I get my new computer. I'm so excited. All right, here we go, 533. And that would give you selling those for 3, buying this for, or selling these for 533, price of the loans $3, and harvesting at 20. So what am I going to do? Then you would do, after you bought these 5, here's what I would do. I would set me an order, a GTC, to sell these 2750s at maybe 525, 550. 5.50. So sell 3, limit, and we do GTC. So that on a good down day, if we had a big move down, look what happens. All of a sudden, you're getting enough credit to pay for the purchase of the 5. Now, is that dumb? Oh, God, no, that's not dumb. So what you're doing is saying, okay, well, let's use the market movement today. I can, buy those 5. You buy puts when the market is up. Worst case scenario. What is the worst case scenario here? Worst case scenario is you pay $3 today, and you do that times 5, and you have bought a hedge for 70 days with no shorts. And that hedge is going to cost you $759. So what's the worst case scenario? Worst case scenario, if you never get a down day, you lose $759. Can you stomach losing $759? Knowing that you've got a great hedge for 70 days. What's that, $10 a day? 70 times 10? You want to hedge your portfolio for $10 a day? I like it. Because what are you doing every day? So now you got this hedge on. Now you're going to sell a micro. The micro that I sold today brought in $80. So am I going to be able to pay for these 5 puts over 70 days by selling a micro put every day? Oh, heck yeah. So yeah, y'all are asking great questions. We use the ebb and flow and the movements of the market to make our decisions. And when you start getting two-sided action, you are shooting fish in the bucket, in the barrel. Very, very good question. All right, anything else? That was great. All right, let me see what chat said. How many days further out can you normally buy after the 42? How many days further out can you normally buy after the 42? Well, I mean, I'm trying to understand the question. We always try to do things greater than 60 days on our Black Swan hedge. But yeah, I mean, you can even go out farther, right? I mean, I try to sell my stuff closest to 60 as I possibly can. Why? Because when I sell these out here at 150 days, man, it takes forever for those things to decay, right? I could come out to 147 days and start doing options here, but man, is it slow. Oh, you don't get nearly the action, right, that you get up here. Like in this one, we don't even have $3 strikes. And you can do these strikes here if you wanted to, 850, just use the calculator to determine your prices. But is the delay slow? The decay, sorry, not delay. The decay is slow. But you an option out here is going to cost more than buying an option down here, right? They get cheaper and cheaper and cheaper as they decay. That's why I like getting into the 70 to 90 day area, because if all before those loans will fill, so I can get a break even or credit on the trade. How long has it been taking me? Not long at all. Let's see, BSH, hedges, my thing keeps up with it, right? Average days to complete hedge is 16. Okay, so let's log in the ones that we bought today and see what this number does, see if it changes. So let's go to our BSH page. All right, so here we are with short puts, fully formed. Oh yeah, this will be the first time you've seen a harvest, right? So here's our 12 here that we sold for those 4 tranches. Here's the 4 tranches that we did. So date of harvest. Okay, this is our first harvest together. See if I can remember how to do this. So we harvested those 12 on 8/6/21. That's today. How long did it take us to harvest them? It took us 51 days. So what we sold for 3 cents in 51 days. What was the price of the harvest? Cost us 20 cents each. So the total debit for that harvest was $140. It cost us $141.84 to do that. Now I need to change this to go after harvest loan puts. After harvest loan puts. See if there's anything else I need to put on there. After harvest loan puts. So now we have recorded the whole thing. So that entire trade that I put on looks like I got a credit initially at 21.23 for selling the 12, but then I had to pay out 32.8640 to buy the loans. I did this all together. So that's why I had to pay so much more to do that. And then I had to pay out $141.84 to harvest them. So this entire trade for how many days was it? 76 days. Cost me a whopping $1,300. But now what have I been able to do because I had those 12 and 20 on? I've been able to sell 3 shorts on the down move of 0.4. I've been able to sell a daily micro put every day. So I'm recouping that. So now let's go to our hedges page, and it should tell us now what we have in our portfolio. So Average days to complete the hedge are 16. We've only harvested one for 20 cents. How long did that take? 51 days. So it keeps up with the average of all your harvests. Our first harvest took 51 trades. So I've got 25 days remaining of long puts, y'all. 21 days of long puts with no risk whatsoever, just letting them go to give me a hedge with no short put exposure. Isn't that cool? So now the hedge ratio calculator keeps up with everything. I've got 5 complete 3x5s. I've got 3 shorts that are unmatched to the 5. Tells me that I've got 18 short puts, and I've got, look at this, y'all, 45 long puts in the portfolio. Crash, baby, crash, baby, crash. When you're short 18 and you're long 45, crash, baby, crash, baby, crash. Good. How do you select the strikes for the beat? There's different ways to do it, but the standard way is to go to the one that trades for around $3. So any of these in here, right? And then you want to make sure that the longs below the low are 50 points. So in other words, if the 2200 were selling for 3, we wouldn't do this one because the 2100 is 100 points away. We want our long puts to be 50 strikes away. So when we go here and find the one that we can sell for 3, which is 2750, look, we're in a good position because they're 50-point wide strikes. So the ones that we need to buy are going to be 50 points down below that here. So I showed you a couple different ways of getting into this thing. You can get into it diagonally. You can use the ebb and the flow of the market to get in. You can sell your 5 a day. And especially if you're thinking, man, we're going to have a down move next week. Let's see, we're going to have a down move. Let me pull up my volume profile. Bobby puts it so the top of the fair value range. There is a very good chance we're going to pull down here. So if I think that's going to happen within the next 4 or 5 days, just logically, then I could sell or I could buy my sale puts to finance the purchase when we have a pullback back to the point of control or back to the bottom of the fair value range. Isn't that awesome? God, y'all. I mean, I want to shout for joy. I feel like I'm at church on Sunday night and he just got finished singing, "Ain't no grave gonna hold this body down." Woo! Hallelujah. Because when you start putting this stuff together, y'all, you got you something special. It sure is fun. You know, Stacy's her 12 filled. I mean, it's just neat. You wake up with your GTC order got filled. And then you're like, crash, baby, crash. I don't even have to watch the market. Crash. It's a lot of fun. So I hope y'all have a very, very good weekend. I will see y'all Monday. Y'all any questions? Need to schedule 101s?